So, in the last few years, the ability to capture a third dimension of returns uh, has been introduced into the mutual fund industry, and that is known as profitability. I learned from when I was in college that stocks go as earnings go, so to speak. That is, as earnings increase, your stock will increase. But this is a slightly different look at profit margins. So to look at this slide, the dimensions of expected returns, again, just to review, value stocks outperform growth stocks over time. In this example, from 1927 to 2012, value, as represented by low relative price or price to book, 11.6% per year versus 9.25%, and that's versus the S&P 500 of just under 10%, 9.82%. That's large cap stocks. Small cap stocks, value versus growth in the small cap universe, small cap outperforming large cap. And again, the small cap index of 11.5, right in between our two here. Same with non-US developed international market, value outperforming growth, and the small cap index outperforming the benchmark. Here, your value and your small cap are about the same, but clearly beating the index. Same with international markets, value over growth and small over the index, and small beating all of large, but not large value in the emerging markets. Now I'm going to add one more dimension here and see if we can make any sense of that. This third dimension of profitability. So we're looking at the bottom part of this chart now. Again, in the large cap space, but we're going to come down here and look at high profitability stocks. That is the highest 30% of stocks, highest profitability 30% of stocks versus the lowest profitability of stocks. Fully 14.4% return on average versus just under 11% return. It's a shorter period because we don't have profitability going back past or before 1975 statistically to look at the numbers. Small cap, huge differences here between high profit and low profit. International, same. Emerging market, the same. So looking at the non-US developed markets, profitability layered on value versus growth. Draw your attention to the fact that here we're talking about 75 to 2012, and here we're talking about 92 to 2012, because we just didn't have the profitability data going back any further. But high profitability, just under 9% versus just under 3% for low profitability versus the index of 5.8. Returns here less than returns up here because the international market did better in the 70s and 80s than it did in the 90s. Emerging markets, similarly, 11% for high profitability versus just under 4.5% for low profitability. Much better than the index here versus here. But again, a little less than historic on a shorter period because emerging markets did better in the first half of the 90s than they did the second half of the 90s. That's always the case. They ebb and they flow. What is consistent is the dimension of return. Higher profitability, lower value, smaller cap stocks. We rely on dimensional fund advisors because this is their core focus, and they do a great job of it.